let's discuss the difference between a break market structure and a shift market structure. Firstly, let's discuss the break market structure. Now, a break in market structure will lead to the prolonged movement of a multi-day trend. If you look at this candlesticks here, if each represents a daily candlestick, then 3 consecutive down candles is already a bearish trend, and a break in market structure will lead to the prolonged movement of that particular trend. So what exactly is break market structure? Well, a break in a recent significant high or low in line with the high time frame order flow. That is to say, if you look at this particular chart right here, we're on the 1 hour time frame, which is the intraday time frame. Price has been breaking structure to the upside for 1, 2, 3, 4 days. So for 4 days, price has been on a bullish trend, and you've seen breaks in structure to the upside. Okay, so breaking market structure will be breaking that in a recent significant high or low that is in line with the high time frame order flow. And the order flow is established after a reversal. So from a downturn here, we had reversal, and therefore bullish order flow was now in play, and so we have broken market structure in line with that order flow. Now there's something we must clear. Okay, that is something that is taught in some areas, so that I might look at it with regards to a broken market structure and a stop hunt. So here's the thing, in some areas, as far as I've heard somewhere, someone is taught that the broken market structure is actually when you have a candle closure above a high or a low, a candle closure above a high or a candle closure below a low, and I think that is just not enough. Well, practically it's taught that as long as there's a body close, it's a break market structure, but if it's just a wick, then it's not a break market structure. Well, that is actually not enough, and that is actually misleading to say, because on this particular chart right here that we dealt with liquidity using, you realize that all these areas are stop hunts, and most of this price actually had body closure above those highs and below those lows, but that was actually not a break structure but a stop hunt, a liquidity sweep, a stop rate, whatever. Alright, so let's just something straight. Then let's talk about what a stop hunt could be, or what it is really. So when you have a low, the sub stops below those low, price can run those low. Okay, it can run the stops below those low, and to know that it's a stop hunt, as a confirmation that it's a stop hunt, what price is going to do is it's going to immediately expand back inside the range, opposing the stop rate, opposing the liquidity sweep, right? So all it's going to do is just take out the stops below that low, a few pips, because it's not just a level but an area where the stops could be resting below that low, and then it's going to expand in that direction, opposing that movement. Now price could close below the low and then just expand high, right? That is still a stop hunt. And the next thing price could do, price could just wick below the low for the stop, for the sell stops, and then expand higher. Alright, this will be like a stop hunt of low. Alright, now as opposed to a market structure break, a market structure break will continue or prolong the trend or the item frame order flow. So with the market structure, when you break below a low, we continue going lower and breaking all the lows, right? Breaking or continue breaking the lows. As opposed to stop hunt, it will now start to expand higher, and break structure, even still break structure that opposes that movement prior to the stop hunt. So this is actually a good example here with a trendy price action instead of that consolidation chart there, where I've shown you the stop hunts across the daily time frame. So here we have a downtrend and an uptrend. Now you see we have breaks in market structure to the downside for in a bearish order flow, bearish trend, right? Then after reversal, we get in breaks in structure in line with that bullish trend. Now let's talk about the shift in market structure. Okay, a shift, a market structure shift really refers to a short-term change in market direction, which can either be bullish or bearish. It is not equivalent to a reversal, but rather a change in short-term market sentiment that traders can capitalize on for intraday price action. The statement here is taken from ICT. Now understand, it's very crucial to understand that it is not equivalent to a reversal, but it's rather a short-term change in the market sentiment. Okay, so the market structure shift will lead to intraday draw on liquidity. But look here, when you have a shift in structure and that's low, price is gonna target the intraday draw on liquidity, and once the intraday draw on liquidity has been met, price is gonna break a structure in line with the order flow. Okay, and even so, here as well we can have a shift in structure now that continues, of course, with the overall order flow of price. So intraday draw on liquidity can either be a liquidity pool or a favored gap. So on intraday perspective, on intraday, price will draw to be the intraday draw on liquidity, will be drawn to the intraday draw on liquidity, and it's gonna paint a signature, okay, in price. That will be the shift in market structure. So we actually have two reversal patterns, stop hunt and a failure swing, but for this we're going to primarily focus on the stop hunt. Okay, so what's going to happen is this: for us to understand what a shift is, we have to have a run on stops, on buy stops or sell stops for a bearish shift, and then displacement opposing that run on the buy stops or the sell stops. So we have a run on buy stops and then displacement opposing that, or a run on sell stops, displacement opposing that. Now displacement means quick and rapid movement, so that means it should be, quick and rapid movement. It shouldn't be slow, and when price breaks the low that was formed prior to a run on the liquidity or the run on the sell stops or the buy stops, that is a shift in market structure. That is the tipping point right there, that the market segment has shifted or changed. Okay, now keep in mind this statement, or this part of the statement, that it is a short-term change in market sentiment. Okay, now when I look at this chart, if you see at this point, the peak points in price here on the hourly time frame, I can tell you that there's been shift in structure across those different points, and we're gonna see that when we look at the lower time frames. Now if you look at this particular chart, you look at those points where we marked out the hourly time frame or the 5-minute time frame, what you see here on the first high is that we had a high, we ran that high, then you had displacement. That is shift in market structure. Okay, so the short-term change in market sentiment, and then at that low that was created there in this area also that we marked, we had a run on the low, and then displacement high opposing that the shift is bullish market structure shift, And then at the other point here, if you look at it, now this one, we had a failed swing actually. I think we failed to take out the high. And but as soon as you break this low, that's the shift in structure. And then at this other low as well, we ran the low, and displacement higher. There's a shift in market structure. Alright, I think you get the point by now. Let's look at one last example. Alright, you ran high, and then boom, shift in market structure, displacement right there. So all this is just evidence, right, of what we just talked about. A shift in market structure is just a short-term change in the market sentiment. So change here to bearish, change to bullish, change to bearish, change to bullish, change to bearish, and so on and so forth. And that, ladies and gentlemen, is the difference between a breaking market structure and a shift of market structure. I hope this was insightful, and catch you in the next one.